Hey everybody, it's Mattie here with Altcoin Buzz with you on this Wednesday, Hump Day and Boxing Day at the same time. Hope you had a great Christmas. My boxing gift today to all of you is that we're going to have a very short video just looking at a couple of stories here, including updates as to what a rogue developer has done with Bitcoin Private. But we're going to begin on altcoinbuzz.io with this opinion piece about Bloomberg, which has contradicted its claim. Just an opinion piece, but we do have a little bit of bizarre FUD here. Article by Lesia. So Wall Street has once dreamt big when it comes to cryptocurrencies, says Bloomberg. Now it allegedly does not. But what if I told you that Bloomberg wrote an article that contradicts its own claims? So here's the quote. Wall Street quietly shelves its Bitcoin dreams is an article which makes big assertions. Its opening is as blunt as its headline. Quote, limbo. That's where to find Wall Street when it comes to cryptocurrencies. Here's the article specifically that Lesia is referring to. Wall Street quietly shelves its Bitcoin dreams. So that sounds pretty dramatic. It sounds a little bit extreme as well, but it's quite misleading. And we're going to take a look at why. As Lesia writes, the article employs a typical layman's tune of how the big companies are no longer excited about crypto. This is due to an obvious factor, Bitcoin's decrease of market value. None of the big companies have thrown in their towels, Bloomberg admits, but the craze is definitely not the same. Lesia goes on here to describe examples about Goldman Sachs, about Morgan Stanley, and about Citigroup. But here's the catch. You got to read it again. After reading the above, you might feel you have read something slightly familiar sounding, like FUD, for example. But here's the deal. The version is not a full one. Going back to the GS case, the Goldman Sachs case, the author does not simply stop by quoting Daniel H. Galancy. After injecting a solid dose of negativity, he goes on to factually assuage it. Thus, he says that Goldman Sachs has invested in the U.S. crypto custody service BitGo and adds phrases like, quote, it's also offering derivatives on Bitcoin and non-deliverable forwards. Now, you might be wondering, who is this person, writes Lesia? That we do not know. In fact, the whole article is filled with appeals to cryptic human beings who are somehow familiar with all the details. In the case of the Citigroup example, Bloomberg even deems appropriate to rely on the words of a, quote, separate person with knowledge of its business. Basically a random person, an anonymous source. So where's the limbo? That's the question. This begs that particular question. Where exactly are the announced limbo and shelved dreams? Or is there a different meaning to the word limbo other than an uncertain situation that you cannot control, in which there is no progress or improvement? Yes, it's fair to say that enthusiasm has been affected because we're not at 17, 18, $19,000 even per Bitcoin US anymore. So things have changed, no doubt about that. But that doesn't mean that people are canceling their plans with the CBOE, the CME futures. That doesn't mean NASDAQ or the New York Stock Exchange or Fidelity or the Intercontinental Exchange. It doesn't mean that they've stopped their strategy whatsoever. So Lesia proposes a different title here. Perhaps, quote, Wall Street is not ready to shelve its Bitcoin dreams, is a slightly more appropriate headline. There's a lot of details in Lesia's piece here. We kind of skimmed over it, as no doubt you observed, but take a look at it in full. Let us know your opinions. It's a weird contradictory piece of negative news that I don't even know why they put out exactly, but there you have it. If you want to check out the original piece of reporting, we're going to link to this below on Bloomberg. Once again, Wall Street quietly shelves its Bitcoin dreams. Very misleading and very deceptive for an outlet of the likes of Bloomberg, in my opinion. This is extremely clickbaity, and there's just a whole lot more to the story as we've been discussing. So, I don't see why they felt the need to title it as they did. But there you have it. Formulate your own opinions and let us know what you think about it in the comments below. In another piece of news here by Romel, a rogue developer secretly minted 2 million Bitcoin Private. So if you're a Bitcoin Private investor, or if that's something that interests you, well, this may be right up your alley. A missing line of code created an exploit on the Bitcoin Private main chain, and a rogue developer took advantage and minted 2 million BTCP. So over the past 2 days, 2.04 million Bitcoin Private were newly minted. That means the original 20 million total supply increased to 22 million thanks to this rogue developer. Quite a bit of inflation there as a result. BTCP is an open source project, and the main developers needed help fixing an issue, so they put out a bounty, the same way EOS puts out bounties for people who find bugs. This developer was able to fix the issue and was later recruited as a BTCP developer and a contributor to GitHub. Little did they know that this person was a Trojan horse and a line of code was missing. This was the exploit. The BTCP wrote a Medium blog article detailing the whole situation. As quoted by Cointelegraph, as the code was open source and the fork mine was announced on Twitter, anyone with sufficient blockchain development knowledge could have exploited it. So definitely an oversight on their part. So skipping ahead, Rommel raises some very interesting points. We cannot live in a bubble and think crypto is one merry-go-lucky place. Skipping ahead again, the real question here is if open source code should remain open to the public. How can other cryptocurrency and blockchain companies prevent this from happening? Bitcoin Private will be undergoing a hard fork to try and remedy this new issue. They will hard fork the main chain and reportedly remove 1.8 million of the shielded coin. So that's going to be about or just under 90% of that newly minted supply. Let us know what you think about this. This is certainly the kind of thing that unfortunately is a growing pain in this space. If you want to read more about it specifically on the Medium blog, you can do so here. Official statement on Coin Metrics report, published December 24th. So with that, everybody, as promised, just a short video today so you can get out there and enjoy your Boxing Day, maybe do some shopping, maybe just relax, whatever you like. But do be sure you're following Altcoin Buzz and Altcoin Buzz News. We are also on Facebook, Instagram, and Telegram. Check out our last video here. Smash the thumbs up if you enjoyed today's piece. If you choose to invest, we wish you only the very best of luck. But most importantly, enjoy your hump day, enjoy your holiday season, maybe have some time off. Thanks for tuning in and making us part of your day. We hope to see you again soon in our next video. Take care.